Hi guys, quick update here for a few things. So stock market has basically been saved by the last 15 minutes of the trading day, and we've now set up a very powerful reversal candle. I mean, this is the highest volume ever recorded pretty much on the ES futures contract. I cannot see on the daily chart a volume higher than that. Yes, we've come close a few times, but that's basically the highest volume ever. Now, there's a lot of shorts now trapped in this market, as evidenced by the Fear and Greed Index, and we do have the Federal Reserve meeting halfway through May, and just a week ago, I mean, this is how ridiculous this move has been. Just a week ago, there was a near 100% chance we're going to stay the same in terms of the current federal funds rate, and now we're pricing in 100% probability, 100% that we're definitely going to cut, and more than likely we're going to cut 50 rather than just 25. So 1 week, this has been the most insane week that anyone has ever seen. 1929 was pretty bad, and this was pretty bad, and 2008, but nothing like this. This is an impossible to predict what was going to happen here, and the count has now become very difficult to sort of count, but I do feel eventually we do break this high, and I find it hard to believe a 90-year bull market is going to end the auction at midnight. That seems highly unlikely. So eventually we do break this count. The current count as I'm working it is that this is some kind of 3-3-3 ending diagonal pattern. So A, B, C, D, E, and then that would constitute an ending diagonal, which, as we know, you can get a leading diagonal, which is like this. That would be a leading wave 1, it's 5 3 5 3 5, but 4 crosses 1, and in the ending diagonal everything is in threes, and once again this wave 4 can cross into the territory of wave 1, then we go higher. So the count is very difficult, and for me there's too much uncertainty in the count for me to justify any long-term positions. From this moment onwards, everything is now a trade on as short a time frame as possible, and ideally finishing zero at the end of the day. You don't want to hold any overnight risk here, I don't think, because if the market has magically peaked here at midnight, it's peaking, first of all, in terms of time, a lot sooner than I thought. Various other economic events need to occur. Number two, in terms of price, we've not quite got to my targets. But if that is a 1-2, then that then sets up that big move down, which we were expecting. And obviously on the Dow Jones, the eventual end for the Dow is going to be, what's that, Microsoft. The eventual end for the Dow would be to break the 08 lows, 2K, and obviously that's a naked level at 1,000, as Tom would say, greatest of all time. So yeah, watch out for a snapback, and there's a lot of shorts now trapped, and they'll have to cover. Now, what supports the stock market going up? Well, first of all, as we've said, we are very, very bearish, so we're going to get some kind of short covering rally. More than likely we're going to cut rates, and also gold, as you know, I've been very, very bearish on gold is going to go to sub 1,000 probably within the next 24 months, if not faster, because when gold starts moving down, it moves very, very quick. Now, this has all occurred in the last 15 minutes of the day, but those who have been following me in the group know I've been very, very bearish on gold, and eventually gold was going to set this move up, and now too much damage has been done. I did think it was going to pull into March, but now gold is setting up for a big move down, and the count on gold has always been A, B, 1, 2, 3, 4, 5, of which we've had the 5 of the 5 of the C of the X. So if gold goes to $800 in the next 24 months, that all of that money has to go somewhere, and likely it'll go into the US stock market. Bitcoin, for those who are following in the group, my last YouTube video said we were going to get to the POC, which we did at 10,199. This is also looking a little bit dicey, because as we know, Bitcoin has been following bonds and gold pretty much the last 12 months at least, and we're now eventually going to break this line, and too much cause has been formed on Bitcoin. So now my new target, I mean, it's been 2K from 2 years ago, greatest call of all time, but now it's going to go to 1,000 and probably end up settling, I think, between 1,000 and 600 in some kind of accumulation zone down here. So if gold sells off and Bitcoin sells off, once again, another reason for money to move into the stock market. Yes, we do have this halving Not too sure what halving means, but the chart looks as though it wants to fall over. So, you know, yes, we might get a bit of a pump, but if everyone's going to short the gap fill, chances are we might not get that. So just a matter of time before Bitcoin calls it a day, as I've been saying for a while. Which is why in the group we all, you know, as soon as I hit that pot and I saw some selling coming, I was like, right, you know, risk reward dictates there's no reason to be in this market. So had a nice little run in the altcoins, now it's time to go. And going back to gold, you know, obviously JDUS has, you know, sort of hit my target here, now it's going to go higher. So maybe we get a move up towards, you know, 40, and JNOG effectively is going to go to 0, and then GDX, well, that's just a shakeout pattern. So we've broken out the top, and now we've closed below. So that's just a shakeout pattern, which means often when you break the top, you're going to break the low. So there's no reason why GDX can't go to 17, if not 12. So this is how quick markets can change, and if you're not looking at them closely, you're going to end up missing the move. And there's a lot of people now trapped in this gold move up here in options and in GDX and in futures, and they're going to have to liquidate very, very quickly. Now finally, bonds. The count on bonds, as I've always had it going back from 2014, has been some kind of corrective sequence, an A, a B and a C, and now we've had a 1, 2, 3, 4, almost the same as gold really, because they do tend to move hand in hand. 1, 2, 3, 4, 5, so a 5 off a 5 off a larger C, and it's got to my Fibonacci target. Now I'm not saying this is going to happen next week, but the way I see it, bonds need to correct. As a minimum, they have to correct this 5-wave impulse. But if bonds end up correcting the entire move from 2014, that then sets up an environment where yields are going to go higher, which obviously is going to be bullish for oil, because oil is now very oversold, and very bearish for gold. Why would you want to hold gold if yields are going up? And the 50 is here and the 61.8 is here. So that's the way I'm reading it. TLT gets to 120. And the big trade for this year has always been the bond short and the gold short. It was always going to be like that the minute we entered 2020. It was just a matter of time. And obviously silver, well, you know, there's no confidence in this chart. It's just going to go to $10, you know. But then that will set up a nice entry there for physical silver, because, you know, but as a minimum we're definitely going to break 13, and I think there's a chance we do get to $10, which is basically the rising trend line from 1971. And silver tends to do this. It has these very, very quick bull markets, long bear markets, quick bull market, long bear market, and maybe then we get that the next move up. So silver is very, very interesting, but not quite now. And quickly, cable. I mean, cable is just setting up for a yo-yo trade. So this is just basically, it's going to tag yearly open to yearly open. So we got in this late on Friday night, and so yearly open from 19 to yearly open 20. So there's no reason at all why cable can't make its way all the way 2020 open. That's the 450 pip move, because this correction's done on cable. I mean, as far as I'm concerned, you know, this is either an A wave or a wave 1. This is either a wave 2 or a wave B, and now finally we get that big move up. So, you know, very, very bullish on cable given what we've done here. We've tagged everything. We've tagged the algo target, nearly hit the 50% fib, tagged the 2019 open. I don't often mark out these opens. I know a lot of people do, but on the yearly candles you need to mark those out. So you just go to the 12-month chart, and it's very, very simple. You just mark out these major opens, and this was not on my chart when cable was at 130, but then when I knew this correction was not over, and then marked it on. And price has a tendency to tag these major higher time frame levels, so you need to mark those on, especially if price is still appearing to be corrective. You know it's going to barrel down into some kind of level and find some support. And obviously it was also the negative 23, and that was just a simple, you know, from the highs to the lows. Oops, that's the wrong one. High low, tag the 50, 61.8, negative 23. So that was also very, very simple. So there was a lot of Fibonacci confluence, and there was also Fibonacci confluence between this wave and this wave coming down, and also there was a low volume node. So there were many reasons to be buying cable on Friday night, and I think cable now makes this move up. So that is the situation in the markets. Obviously there's a lot of volatility right now. I mean, the VIX is at 50, which, you know, doesn't really seem the macro environment for the VIX to be this high. We've had a bit of a doji here forming late in the day. I mean, it's already selling off. Typically with volatility, you always want to sell it when it reaches these highs. I can't imagine the VIX is going to hang around here for too long. I mean, we could easily get, you know, a huge move up in the stock market as early as Monday, basically, and the VIX, next thing you know, it's all the way back down here again. So very strange week, made no sense, but in the last 15 minutes of the day on Friday, they've managed to save this stock market. And like I said, if money comes out of bonds, gold and Bitcoin, they're only going to go one way, and they're going to go into the ES and the stock market. So that's it. And yeah, probably want to break this high. But yes, I would agree though with a lot of people who I'm sure a little bit lost in the count, because the count as I was working it was always that was the 1, that was the 2, and another 1, 2, and here we were supposed to go into a wave 4 triangle, but Elliott wave will always get trumped by volume. There would not be a stock market without volume. Volume profile, candlesticks, volume, whatever, everything about volume will always override any Elliott wave or any Fibonacci. Okay, prices don't move because of Elliott wave and volume and Fibonacci. They move because of volume. So you need to be able to read volume as best as you can and use everything that we use. So the volume profile, the fixed range, that's a very good one. You know, without a volume there would be no stock market. And here I believe it's also tagged some 50%. I mean, it's tagged the 38.2 of that zone and also from here. So yeah, I mean, I expect the stock market to make a comeback, I think. And if we just bring up the 200-day moving average, which I don't often have in my chart, but you can see here we're now below here, and a lot of people, big funds, basically buy above the 200 and they sell below. So that just added extra selling pressure to this move. But given the fact that pension funds are now back in and they've rebalanced their portfolios, the minute we get above the 200, and this could easily happen by Monday morning, that's how bullish this late night close on Friday is. That then sets up the move back up again. Like I said, it's probably not going to be a straight line, so we could easily rally into the Fed halfway through March, get another, maybe, I don't know, a wave 2. It's doubtful we now test these lows, but if we do, fine, we might test it and then we go higher. But eventually, as dodgy as the count is, and there's no way to explain this count, I mean, it's a very, very dodgy count. You know, it's that's the count as I'm working it, and ending diagonal. So that was a 1, a large wave 2, so a shallow and a long wave 2, which means wave 4 by the rules of alternation can very well be quick and steep and overlap, and now we're going to go up in a 5 or a 3 wave sequence up to here. So this will either break into 3s, a large zigzag ABC, or 1, 2, 3, 4, 5. But like I said, volume will always override Elliott wave, and you know, we do have higher targets, and on the Dow the target's been 30, well, it's 37k now. I mean, it was 43k a while ago, but now I've decreased it to 37k, which is here somewhere. So I forget what the target is, but it's something like 37k something. But really we have to follow the ES because that's the one that we're using. So on the ES, do I have any targets up here? Yeah, so we still have, I mean, that's looking a bit unlikely now to get as high as 4,300, but you know, as a minimum we're going to break these highs and then we can reassess. And like I said, the alternate count is it's just a 1, 2, 1, 2. That is very, very bullish, but you know, given how much damage has been done here, I'm not too sure about that one. But yeah, very, very risky times, volatile times, and that's the current situation. So I'll catch you guys on the next video. And finally, oil. Well, oil is, if bonds sell off, yields go up. That's very positive for oil. They tend to move inverse, and expect a rebound. Maybe we have to break 42 for us to get a rebound. So maybe we get a shakeout of this level and then go higher. But oil and the stock market tend to go in a similar direction, and certainly you can count 5 clean waves into here. So I am expecting a bounce in oil at some point soon as well, but the count, as always, is a little bit messy with oil. But yeah, that's my take. I'll see you guys on the next video.